Hey traders, welcome to Charts and Coffee. Hope everyone's doing well this Wednesday morning. And as we kind of wind down what's going on with the end of quarter, always a difficult time because there's such a push-pull between whatever the seasonal factor is for September, which tends to be for the second half of the month, pretty darn bearish. And then whatever it is that we're dealing with in terms of what really is bottom picking season. When I think about Q3 to Q4 transition, it really is about that bottom picking. And as we've been talking about for a couple of weeks now, it really is going to be focused mostly on tech, not on semis, but tech, communications, consumer discretionary, the top weighted tech names, not the Dow, not the S&P, not financials, not healthcare. I would throw in one other sector, the hottest sector we have right now, which is energy and crude oil. And that's what we're carrying into going into the last quarter of the year. So I hope everyone's doing well. And we're going to take a quick jog through the market together. By the way, yesterday we did a little bit of that pre-market breakdown, which is very much a part of what we do in Charts and Coffee anyway. And hang on one sec. Let me just open up. Oh, that's not what I wanted to do. I hear myself talking. There I am. In yesterday's Charts and Coffee, we had a very in-depth breakdown of the pre-market routine. And so if you're lacking that pre-market routine, if at the bell you're getting a little bit of that deer in the headlights feel, I get it. I was that way once too, until I had a 10-12 minute pre-market routine set. So this is the pre-market routine that I use. This is the pre-market routine that we use in the Sector Secrets Mastery. And it's this process that allows me to start the day off with a running start into 9:30 because we already know what we're looking for. We're already going to get some key levels right on the open, like our previous session close. We're already going to know what hot zones, including earnings, are in play. And we're going to be able to, by 9:35, right here, have a really clear read. 5 minutes into the session, I'm going to have a really clear read on some basic sentiment levels just by using that 5-minute range. So these are things that make it really simple and more important than simple. It doesn't have to be simple. It has to be repeatable, although oftentimes simple and repeatable tend to travel parallel paths. But what we want to remember is it's got to be repeatable. We've got to be able to do the same thing every morning and equipped with the right information. Not too much, not too little, but the right information. The right information is starting at about 9:20. What are the hot zones? Head on over to Forex Factory. Know who's speaking today. Know what the red hot zones are. If you're not familiar with the term hot zones, it's a term I coined back in my first book. At this point, that's about 15 16 years ago now. And a hot zone is three really important things. It's going to be high volatility. Why would we care if there's not going to be movement? It's going to be high volume, which really is what the attention is measured by. And the last thing is, the most important thing is, it's got to be scheduled. If we don't know the thing is coming, there's no way there's going to be that pre-positioning, people guessing at what it might be. We see this with earnings, but it happens with any high impact event. So for today, not a whole heck of a lot. We had the core durable goods. We already had Kashkari. If you take a look at the action at 8:30, Kashkari, we could probably say, initially sent the markets lower, right? With his comments, you could see the movement lower on the 8 a.m. 5-minute candle. I'll show you there in a moment. And then durable goods sent it right back up. So these are how we sync up the price movement with what's on the calendar, because it's got to be a scheduled, high impact, high volume event. All right. So let's jump on over here to the S&P 5 minute, and take a look. Few key things, right? So if you're with me in the mastery at 9:20, we start talking about things like previous session closes. We start talking about multi-trends. We're spending most of our time getting a confident read on directional bias. That's how we focused on XLE, Exxon, crude oil to the long side, because that was the structure. That's how we focused on things like the Russell to the short side. It takes about 10 or 15 minutes, but once you get those reads, it's a whole lot easier to put in the trades. And we're talking day trades here, but I don't want anyone thinking we're flipping in, flipping out, flipping in, flipping out. I think a lot of times day traders perceive day trading to be something that could be more active, stop and reverse, and in and out, in and out. That's not what I'm talking about. I'm talking about the only day trading definition that there is. Day trading is simply being flat by the end of the day. All the techniques that individual day traders like myself use is really the strategy, right? But at the end of the day, every day trader agrees on just one thing. We don't agree on time frame. We don't agree on techniques, indicators, nothing, right? But at the end of the day, we all say, oh, but right, we're all going to be flat by the end of the day, because that's what day trading is, today trading. So if we take a look at the S&P, by the way, here's your 7:30 sell-off, right? Here's your 8 a.m. sell-off, and here's your 8:30 response. So we had two moves to the downside before we had the move to the upside. The cool thing about the two moves we had, one, the 7:30, 7:25 sell-off right up into the resistance of the hourly price movement range. That is already sitting out there, automated hour after hour. Here comes Kashkari, and we launch out of the green support zone and sell off a little bit. So if I can take advantage of those green and red zones when they're in play, that's going to help a lot. We're above the previous session close, so I have minorly a bit of a bullish directional bias, and we're neutral on the 5 minute. Those few things right there, gang, using an easy to draw manual line, right? We don't have to automate everything, although I love to automate things. Remember, gang, we don't want to slip into the very dangerous slope of automation, which is a black box. How many of you know the difference between automating manual things, like an automatic transmission and say a 5-speed, and a black box? What's the difference? Well, I know what a manual transmission is doing. It's what my automatic transmission is doing. I can Google that and I get what's happening with the flywheel and I get what's happening with all that stuff, right? Okay. Actually, automatic transmissions are pretty darn complicated, but we know what it's doing and why. All right. Black box is, well, there's a level there or there's a line there, but I have no idea why it's there. If we don't know why something's there at some point, we don't trust it, because we have to know what's going on beneath it. So that's why I always tell you all, previous session close, really easy. Where do we close at 4 o'clock Eastern? The HPMRs, what is the typical volatility of that hour? And that's what I'm plotting these lines and levels on. And maybe I'm too transparent about stuff, but I'd rather err on the side of that and everyone understand, oh, that's why those levels are there. Going back 6 months, Raghee's figured out that every single symbol has a certain amount of movement that it puts on every hour. And then we plot the zones based on that. Historical patterns, right? And so think about, do I really know why that level is there, or am I just sort of following it blindly? So I will tell you, I've done the following blindly thing. And at some point, you're going to lose faith in it because you don't know why you're making a decision based upon a thing that you don't know why it's plotting on your chart. So again, I'll spend the time to talk about, what it is that we're looking at. So when I head on over to the, let's take a look at the Russell here. Let's go from the S&P to the Russell. Neutral, above the previous session close. These are all things that should be a little bit more bullish. But I will say, because we're neutral, I have to be open to the fact that we could hit some sort of resistance level and come back down. Would I rather be long? Gang, I'd much rather be long. This is where the 5-minute range is going to help. It's not necessarily a cue or a signal to get in. This is a tool that we've automated because it's just easy. If I can take the manual transmission and automate it, great. But what's the logic, right? That's the most important thing. So the logic is that during 9:30 to 9:35, there's a high and a low that's put in, right? I want to mark what that high and low is. If you want to look at just the candle body, that's fine. If you want to look at the range of the wicks, that's fine. But get a feel for what happened between 9:30 and 9:35. And then that simply is a support or resistance level. If price is below it, there's a certain amount of resistance at that zone. If price is above it, there's a certain amount of support at that zone. Whether or not I'm bullish or bearish is going to go back to the multi-trend and where we are in relation to previous session close. You don't have to complicate, automate, and use some sort of black box to understand what's happening in the morning. Use things that traders have used forever. And I'm just talking about price and time. If you can use price, time, and volatility, now you're using more of these different factors, right? So for me, price, time, volatility, and volume, those four things, those are the four factors that move the market. The more of those you are using, the better off you are. So if I use volatility by way of my HPMRs, one factor down. I'm using time, one factor down. Of course, we're all using price. So that's a given. And the last one would be volume. Do I know where I am in relation to an anchored VWAP? Do I know where I am in relation to a tool that I use called the V-score? Am I looking at price-based volume? Price-based, right? Not time-based. If you put just a few of those things to work, gang, you're going to find a whole lot more clarity. And if this kind of stuff resonates with you, come check out what we're doing in the Sector Secrets Mastery. I think you'll find that when you start thinking about price, time, volume, and volatility, the market isn't a flat sort of one-dimensional thing anymore. Now you're looking at things in really not just 3D, but 4D. Okay, so think about how many of these factors you can put in. Think maybe about how many of these factors you may have now, right? Maybe you have some of these you could put to work now. Get them on your chart and then put a sequence behind them. So that's really what I'm going to start the morning off with, this particular sequence. Again, check out Forex Factory. Make sure you keep an eye on their earnings calendar because we're right back in blasted earnings season again. And then, this is, and by the way, gang, this is what we're doing in the mastery. And we're right now operating. I'd crunched the numbers yesterday. We're at a 71% win rate. Perfect? No, I'm not even seeking perfect. In fact, if I get much above 70, I know I'm taking profit too quickly. Right? I don't need a really high win rate. In fact, a high win rate, when I start getting into the mid 70s, 80s, I know I'm taking profit too quickly, right? We have to have some losses. And I find on average about 3 losses, maybe 4 losses per 10 trades is a sweet spot because that's going to keep me obviously growing my account, but I know that my targets are not really close. So don't be wowed by a super high win rate. When I see a super high win rate, when I run my numbers on TradesViz, I'm just getting in and getting out, right? And that's not winning, right? If I'm not seeing an option that I bought move in actual points and dollars, I'm not paying my bills, right? So don't get razzle dazzled by, oh, this is a 40%, 100% winner. Who cares? How many points and how many dollars was it? What size account was it, right? And those are things that I think, once we get realistic about what we're trying to achieve as traders, let's be honest, pay our bills and then some, right? Then we can start being realistic about the kind of risk we have to take, the kind of account size we need. And I think that's where a really realistic and solid foundation can be built for your career, right? And that's where I find myself wanting traders to think about not what I'm doing personally, but are you being realistic about your expectations from your account, right? Okay, so as always, gang, thank you so much for being here. And then if you have questions, feel free to ask. So either everyone's waiting for their coffee to kick in, and maybe mine is too. Just kick it in now. If you have questions, feel free to type them in. And the other thing too, I was going to remind everybody about is, here we go. Let's see. I was going to remind everybody, there's a couple markets that I would say, if you haven't been keeping an eye on them, and I know everyone sort of has NASDAQ and S&P focus, but I know we've talked about crude oil a lot. I know we've talked about energy stocks a lot. Please, gang, this is not just futures. Crude oil can be, yes, crude oil and micro crude, both very liquid. And then keep an eye on XLE and Exxon. We traded both of those yesterday. Both of those were really, really good trades. And then also keep an eye on USO, the ETF alternative. So you say, Rog, I don't trade crude oil futures. Maybe someday, but right now I don't. USO is a really, it's not a great, it's a good way to trade crude. It's not always liquid. So when you do buy the strikes in USO, puts or calls, mostly calls, please make sure you've got adequate open interest because it can be spotty on the OI. All right. Hey there, Robert. Thank you. It's a Starbucks kind of morning for sure. How does the QQQ look for day trades in the 5-minute today? So what we're going to do is we're going to take a look at the NQ, right? So the NQ is that more 23-hour version of the NASDAQ. Whether we trade QQQ or MNQ, NQ really needs to be where we start the conversation. So take a look at what we inherited. We were bullish from the European Open to about the Asian close. We were bullish until about 5 a.m. Eastern, and then we've been neutral. Take a look at that yellow multi-trend. We've been neutral ever since. We're neutral and oversold on the daily, and we're above the previous session close. Hard not to be a buyer and a bull this morning. So I've got directional bias, but that doesn't mean I just buy right away. I'm going to go right back to Robert. I'm going to go right back to, especially for QQQ. QQQ is definitely going to need those first 5 minutes. Hang on, let me get the notes back up. QQQ is definitely going to need that first 5-minute reading. So again, whether you use the open to close zone of the first 5 or use the entire range of the first 5, just know where that first 5 range is at. See if the market's above or below that. And then ultimately, the first 15 minutes, if you can hold off for the first 10 to 15 minutes, spend that time not asking yourself, how do I get in? Make a slight tweak to that question. Ask yourself, what direction should I get in? And I find that waiting that 10 to 15 minutes makes a huge difference in the quality and the probability of my trades, rather than thinking like a horse, and they're off, and it's now time to start slinging contracts. Get really clear on the direction and then focus on the sequence of your setup. So the first 10 minutes easily are focusing on hot zones, what happened pre-market, structure, 5-minute, multi-trend readings. That's all about volatility and direction. So that's always going to be my advice. I don't know. Robert, the honest answer is I don't know. That's straight up. I'll know better at 9:35. I'll know even better at 9:45. And even though I'm waiting 15 minutes, I'll tell you this much. We are still averaging, and I'm purposely trying to tap the brakes on the number of setups because it is end of week, or this is the week of end of quarter. I am purposely trying to have fewer setups because of the volatility of this week. But on average, we're 4 to 6 setups by 10:35, or 2 to 4 fills by 10:35. Right now, I'm trying to stick to maybe 2 to 4 setups and maybe 2, 3 fills. And we had 3 trades, went 3 for 3 yesterday. Again, that's not the point. We are still able to get, I think, a pretty adequate number of trades out there within a very short period of time. So the thing I want to leave everyone with is, if you are day trading, you don't have to day trade all day. I know that's not realistic for a lot of folks, but you do want to spend about 65 minutes, 9:30 to 10:35, doing that active trading. 65 minutes is pretty doable, right? And you're going to spend about 10 to 15 minutes before the bell. So I'm talking about maybe 80 minutes of your time that if you can spend properly, you can put those trades in and then get on with whatever you got to get on with because of these little things, right? Because at this point, once I've got the bulk of my trades in, I can manage on my phone. I can manage on a laptop, right? So think about that. More time day trading is not productive. That's what I have found for sure. Those first 65 minutes, very effective. All right, gang, as always, thank you so much for being here for the show. Thank you. Thank you. I appreciate that. Thanks for smashing the like button. Thanks for the questions. Thanks for the comments. I'll see you tomorrow. Same time, same station. Put that process to work. You don't have to rely on black boxes. I would never recommend that. Always understand the sequence. Always understand the logic, right? That's where confidence will come from. Last Friday, I did a video called Confident Trading Starts Here. Check it out. It's at the Simpler Trading website, YouTube channel. And check that out because that's truly what I believe you can do on a very, very consistent basis. All right, gang. I'll talk with you soon. Be good to each other.